And the first stage is that we have to be able to determine the size and the composition of the reservoir. So in order to know exactly that what is the shape of the reservoir or what is the shape of this big stone that oil is, inside it, we have to use some information which is called well log. Well log informations are the information that you sent to me, yeah, and this should be, imported into Petrel, or there are different softwares like geolog, Petrel, and based on that you can come up with some numbers that okay, at this height we have, we can reach to oil, but it is something that is very practically, it is just showing us a point that, in that specific point, there is a chance of, presence of oil or gas. Then we will do the seismic surveys. So you have to have the seismic surveys detail in order to be able to, to make the analysis. You will see that, okay, there are some bunch of information like this. Usually the surveys are done by Schlumberger in that area. So I believe that it would be something like calculations of the reservoir size based on the seismic analysis. So this is the second part of the information that you need. After that, for each of the reservoirs, they do the core analysis and core sample analysis. They have to take, drill down the hole in a way that, they have practically the lithology and also the rock characteristics of the oil reservoir and the whole well. So as you see here, so they start from, for example, let's say the surface, and then they go down till the 2,000 feet. That was, the start of the reservoir, and they go down. And as you see here, so for example, here there may be oil in it. Then you go down, there is no oil in it. So based on that, they can do the analysis. And the thing which is important is that they will do different tests. They will check exactly that how much is the percentage of saturation of oil inside the stone, and also what is the porosity of the stone, what is the permeability of the stone, and so on. So these are the parameters that, again, we need. After that, there are some tests which are called the PVT tests. So if you check in the internet, you will see that, for example, the price of the Brent oil is different than the price of the Texas-based oil, yeah? And each of these are specified based on the characteristics of the fluid, like the density, like viscosity, surface tension, compressibility. So in order for us to know exactly that our oil is something of high quality or of low quality, we have to have the, the analysis of petroleum fluid analysis, which we call it PVT test, which is pressure, volume, and temperature tests. And these are the different tests that are done. Then we need the production data. So we know that there are some fields, there are some, oil rigs that, and oil, in fact, wells that, are producing right now. So what is the production data? How much is the flow rate? How much is the gas oil ratio? And so on and so on. And finally, with the software, okay, it can be different type of softwares. It can be, again, Petrel, it can be GMC, it can be, CMG, it can be Eclipse, different type of softwares. You can make the, the technical people, we can make the analysis that how much is the volume of the oil and gas. So you see here, the red area shows the gas, the green area shows oil, and this, blue area shows the water or aquifer water. And we will calculate exactly that, how much would be the volume of oil and gas in that reservoir. After that, we are going to estimate the amount of the recoverable reserve. We will check based on the volumetric method and also the analysis of the similar reservoir in different wells. We will check that, okay, out of the whole volume that it has, how much of that is, recoverable. And this is calculated based on the recovery factor. The recovery factor, in different reservoirs is kind of, clear. We can find it, we can make some approximation based on that, based on the, the articles available and, the published information and news. The material balance method is also another method. I'm not talking about the other methods, but in order for you just to have some idea about the decline curve analysis, the material balance analysis. And the next stage is that, okay, we check the recovery factor. We talked about it, that, okay, and we have different recovery factors. I'm not going into the details of that. Right now, we know exactly that how much oil, how much gas do we have. We have to predict that what would be the price of oil and gas in future. And we have to consider different scenarios. So the scenario, usually we consider 3 different scenarios, the bearish, bullish, and base scenario. So in that case, if the price of oil goes up, down, and what will happen, then we will do the calculations of development and production cost. That you have to give me the details, that how much would be the drilling cost, completion cost, operation cost, maintenance cost, capital cost, initial capital cost, transportation cost. And there are a lot of other different fields. I'm not sure if, you have the royalty agreements, what would be the royalty fees if there is an owner, there is an investor, and you have to pay them, we have to know all these details. At the end, you are going to, determine the value of the net present value you can check, with the mathematical formula, you can find that, okay, what is the value of the oil and gas, inside the reservoir. We are assuming that the oil and gas field is going to work for a specified, period of time, let's say 10 years, 20 years, whatever. That is, based on the norm of that reservoir, and also based on the information that we got from simulations in the previous stages. And the PV10 that we talked about is something that assumes that, okay, in each year, the investor is looking for at least 10%, return on the investment. So if we assume the rate of return of, 10%, each year, then the value of the net present value of our project will be how much. And after that, we have to go for sensitivity analysis. We have to check that, okay, if our assumption for oil price is not correct, if, for example, the discount rate is not 10%, it is 12%, if the initial capital needed is not, for example, 10 million, it is 20 million. Each of these cases, should be analyzed, and we should check exactly that what is the worst scenario that can happen. And also there is another way that we usually use for the cases that, we are dealing with oil, gas, gold, and we use the Monte Carlo simulation, which is a statistical method. We use 10,000 different data in order to be able to predict different, scenarios, 10,000 different scenarios. And in each of these cases, we will come up with some kind of histogram that, okay, in 75%, there would be the chance of, earning this amount of money. In 10% of the situations, there is a chance that we lose and we are not successful. And